Hey traders, Andy Demi here. Hope you're well. Hope you're having a good day. So today I want to speak about probabilities and confidence of a trader and the importance of understanding what you're actually doing when you're taking a trade. So essentially speaking, when you think of probability, it's talking about what is the likely outcome of something happening. So it's essentially the odds of something happening, and there's a formula to that. There's a formula to working out how likely a trade is to win or lose. Now if you think about that, that's kind of the model of casinos, isn't it? Because they know the probabilities in their favor, because everything's kind of rigged that way, so that on average most the gamblers are going to lose money on average and the casino is going to make money on average. So when it comes to trading, it's really about building a strategy that you can understand and implement, that has an edge, that basically allows you to win like the casino over time. Now here's where it gets a little bit more tricky, because sometimes we're kind of adding things onto our charts in order to improve probability, but what you don't really know is it really improving probability? Because sometimes when we've made a decision, when we've made a decision to buy or sell something, or we have a bias towards buying or selling something, we often put indicators and various different things onto the chart in order to basically give us confidence about taking that trade. Now that's not really improving probability. So what you really need to be looking at is the context, the context of basically what you're doing on the chart. So does it make sense? Does what you're doing make sense, and is it actually improving the probability of your trade working out? Because for example, sometimes I kind of see people looking at things in isolation. So for example, they might be looking at a chart pattern, maybe a reversal chart pattern like a head and shoulders. But then they're looking at it when the market is basically not trending, so it's kind of going sideways. Well, then you might think, well, is that pattern giving you really an increase in probability, or is it giving you an increase in confidence? The reality is it's probably just giving you an increase in confidence rather than an increase in probability, because it doesn't really make sense for that pattern to be relevant when that market's going sideways. So what I would recommend for you as an action is to really think about what tools you want to use for different situations. Like for example, when the market is trending, which tools should you use? When the market's ranging, which tools should you use? And how many tools you should be using. Essentially, you need to put this all into your trade plan, and that's going to allow you to actually increase probability of something working for you rather than just increasing your confidence. Because an increase in confidence essentially, yes, it might make you take the trade, confidence to take that trade, but ultimately if your edge isn't there, you're not going to make money, and ultimately your confidence is then going to go down. So that's kind of really what I wanted to speak about today. Sorry about the background noise, but hope you enjoyed the video. Somebody's calling me again. Hope you enjoyed the video. Hope the content is useful. Please comment if you have any questions. Send me a direct message. Have a good day, guys. Good trading. Take care. Bye bye.